We're looking for current, initial, and continuing claims, and we all acknowledge that it has slowed down a bit in terms of its drop. We're consolidating around that 1.4 million on initial claims. But this week is a big drop. 1,186,000. 1,186,000. That is indeed the smallest weekly jobless claims that we have had since the big explosion in claims occurred, of course, in March. And on continuing claims, also a bit better than expected, 16,107,000. So 16.107 million. And both these numbers are better than anticipated. And the immediate market reaction, of course, should be that yields move up a bit and we should see pre-opening equities firm up. Now, whether that occurs to a great extent largely depends on the psyche of investors moving into tomorrow's data. The jobs report certainly is going to be a biggie. Now, the revisions are slowly trickling in, Andrew, and the revision on initial claims is very subtle. Still right around 1.4+ million for last week. And on the continuing claims, it went from a little bit over 17 million to a bit under 17 million. But that doesn't dispense the notion, especially on initial, that the drops this week on both metrics were better than expected. Back to you.
Some positive news there, Rick. Thank you for that. I want to get over to Steve Leisman, who joins us with more as he's looking through some of those numbers. Steve?
Good morning, Andrew. Yeah, I think this highlights what we were talking about. One is that the job market had a bad time in July, and that was in part because of the resurgence of the virus, some renewed shutdowns. As I showed in some of the high-frequency data in the 7 a.m. hour, there looks like there was some uptick after the survey week. We'll see if that suggests that maybe we through the worst of this, I don't know what you want to call it, part 2 of the virus. I don't want to call it a second wave because you need to reserve that for the possibility of something later on. But it's a definite improvement. It's still, you have to pinch yourself and say, wait a second. 1.1 million people filing for claims does not suggest that the labor market is healthy. It just means it's less bad than it was before. You still have 16 million people on continuing claims. And then you have the issue of the benefits, the extra benefits from the federal government running out. That could cause two things to happen. On the first wave, it could cause fewer people to apply for these benefits because maybe it's not worth it for them. On the other hand, you could have new people who lose their jobs because we've had some good numbers in the economy from retail sales and other places because Americans had this extra benefit that was out there. So we'll have to see how all this shakes out. I think the question that's been asked a lot, well, what letter is it a V? Is it that? There is no straight line on this recovery. It's going to be up and down and bouncy. Let's just hope that in general, the progress is forward and toward the better over time.